Welcome to Own It. This is going to be a very special and exciting episode because so many of us have wanted to become property owners for the passive income to build generational wealth. And in some locations, it can be extremely daunting. So we are chatting with Brian Tran, who is the founder of 50 Hills Real Estate, and he has a very repeatable, ascertainable way of getting your foot in the door and becoming a property owner. Let's get started.
Just buy your first property. Let's not go and buy the big project yet. That's where the real money is made, but that's also where you can lose a lot of money. I try to always buy properties that need a little bit of work where I can put sweat equity in, and then that way I can raise the value and then do a cash out refinance so I can recoup some of that money and then go repeat the process. I don't time the market. I just want time in the market.
Quote that.
Now, damn, there's our quote.
Yeah,
we should
that's the
stop
quote.
now. Stop now. Goodbye.
Welcome to Own It. I'm Hillary Saunders, joined today by my very smart co-host, Spencer Kroll. Hi, Spencer.
Wow. Okay, I don't know which co-host you're talking about, but I'm glad to be here anyway, Hillary. I'm doing well. I feel very smart today.
One of our favorite subjects is rental properties and owning rental properties, and hence our even smarter than us guest, Brian Tran, who is the founder of 50 Hills Real Estate in Northern California and owner of multiple businesses. But today's focus is how the average person could get into owning income property and then build up their passive income portfolio for generational wealth. And we're going to make it ascertainable for everyone today. So welcome, Brian. Thank you for taking the time.
Thank you guys for having me. I mean, I don't know about the smartest. You guys are who I look up to. So I'm happy to be here and I'm happy to share my knowledge with the audience.
I love it. This is going to be so much fun because Spencer and I, this is like one of our passions and we talk offline a lot about it. So I just want to go straight into it because Brian, you're teaching classes for how to get into passive income, wealth building, and where did your passion for real estate come from? We were just chatting about your parents buying properties, but they didn't speak English. So where did this all start?
Well, the American dream is always to own property. And so when my parents fled Vietnam and they came here with nothing, they obviously the story is the same amongst a lot of immigrants that come here. They work hard and the only way that they know how to build wealth is through buying properties. And so they work, they save, and then they try to buy properties. And luckily, my parents were able to. I grew up in Oakland, California, and they were able to buy a single family home. And that's where we grew up. It wasn't the best neighborhood, but they were able to do it. And it just goes to show like anyone can do it if you put your mind to it and you come up with a plan. And that really just kind of struck a chord with me because I grew up seeing them not knowing how to navigate the laws and all that stuff. And they were able still to buy something. And I'm like, okay, if they can do it, then I can do it on a greater scale. And that's exactly what happened. I graduated college and I went right into the becoming a realtor because I thought that that's the best step to learning and earning, right? And so we became a realtor and then I don't know, I fell in love with it. I'm not the smartest guy. I'm going to be honest with you guys. I don't know geometry. I don't know calculus. I don't know all the other science stuff. But with real estate, it's really simple math. It's not too crazy, right? And especially if you build your team, you get a good lender, you get a good realtor, they do the homework for you and you just got to review it. And that's what I try to teach in my classes. Like, you don't have to know it all. You don't have to do it all by yourself. You hire smarter people, lenders, realtors, property managers, and then they will help you. And that's kind of what it is. Like, then it becomes addiction, right? Like Monopoly. It's a game at this point.
So I want to go into that because something which we were talking about beforehand, you were saying like what an easy investment it is to understand. And we were talking a bit about that because stocks, you have to understand all the things, but what's the company doing? What's happening there? What are some of the things that you look at when you're looking to invest in a property? Like what lesson have you learned where you're like, oh man, I wish I'd thought of this the last time I bought a property. And now I'm going to keep this in mind, if anything.
Sure. Location is key. You try to buy in neighborhoods that are doing very well. I don't speculate too much anymore. I don't try to buy a neighborhood that is going to, see exponential growth. We're not chasing that, right? I know some people are, but again, we're going to keep it very simple. I buy in neighborhoods where the statistics are already there and I'm happy with the numbers. And I leverage my realtor partners and I leverage my lending partners to do the numbers for me. Okay. So what is my mortgage? what is the rent, and what's left over. That's kind of the simple formula that I use first. And if there's money left over, that means I'm making money and I'm cash flowing. And then from there, I just look at the general property itself. Like, is it in good shape? Is the roof good? Kind of like, again, it's once you learn it once, you don't have to learn it again. And we keep it simple. We buy good properties, right? And your realtors will be able to tell you if it's a good property or not. And I'm bringing up my realtor partners because we can talk about this later on, but I buy out of state as well. And so I'm licensed in California, but out of California, I don't know the rules. I don't know how this neighborhood is. I don't know if it's good, if it's bad. And so I'm leveraging the knowledge of my team.
Yeah. So the key, one of the keys here, the two, is having a property management company. If you're buying out of state, obviously you're not flying out there to fix an appliance or something. So that's key. Yeah.
I've never been in Alabama.
Yeah. Oh, yeah. No, you're not doing that. Well, so one other question here on this, because I was talking yesterday to Daniel Morgan, who's over at Marterra Properties down in Orange County, and we were talking about investment property. And he has this whole analysis that he does where he's always looking for value add. Can you build an ADU? Can you, whatever the fixes are, where he can do that. And other people, I know that there are people that just buy and much more simply like, can I do this? What can I do to increase my rents? And then just deal with the cash flow that way. Do you also now look for value add? Is that something that you started that you used to not do and now you do? I'm just trying to get the progressions that people go through.
Yeah, that's a good point. So I didn't know how deep you wanted to go in this because I can go down a rabbit hole of everything that we do. But I would say just
a little bit into the rabbit hole.
Sure. So in the beginning, and what I teach people is that just buy your first property. And when you're buying your first property, like, let's not go and buy the big project yet. That's where the real money is made. But that's also where you can lose a lot of money. And so I get people in first where it's going to be minimal headaches. They're going to get that skin in the game. It's going to be safe. And then once they're hooked, once they start accumulating, like they get a little bit more savvy, they find out that, hey, this is actually not too difficult. Now we can go buy the value add. And so that is the best way. I try to always buy properties that need a little bit of work where I can put sweat equity in. And then that way I can raise the value and then do a cash out refinance so I can recoup some of that money and then go repeat the process. Right? So there's a lot.
Let's take just an average buyer and let's get ourselves probably out of California in our little world, because I think the entry level in California is probably more expensive than most of us can afford. So I'm an average buyer. I own my home, but I really want to get into real estate for either my kids or building up some generational wealth. But I can't afford where I am to buy in my own area. So what do I do? Where do I look? Which states do I look at? How do I even connect with a good realtor over there if I don't know anybody in Alabama?
Okay, all right. Well, this is what we're gonna do. Then this is because that's exactly where I was. Right, I'm in California. I'm in San Francisco. I'm in one of the most expensive market where even if I were to find the best deal and I did all the rehab and I did a refinance, I would lose money every month renting it out. And so that's why I said, we got to go somewhere else. And I keep it simple. You got to hit Google or Chat GPT and you ask it, what are the best rental markets to own? And it will spit out a handful of cities and ultimately you pick one that you like the most. And what I mean by that is, as I was holding all these classes, some people like Milwaukee, some people like Florida, and they're all great. They will all do well if you buy correctly. And so what ultimately, I hit my finger on the map and I chose Montgomery, Alabama. Then from there, I leverage my realtor here, which is my team and all that stuff. And I said, do you know a realtor out there? And they say, no. Great. Then I go to the reputable sites, Zillow, Google, and I look for high reviews. Then I just call around and I interview them, just like how you're just building the Rolodex and you're just starting to learn. You ask questions and you find someone you're comfortable with that seems to be the most knowledgeable. And then from there, I ask them questions on, okay, if I buy this property, do you think it's in a good neighborhood? Or if I buy this property for $100,000, what should I expect my rent to be? You have to leverage people. And then from there, I go back to Google and then I just, I put in the number, what they told me, and Google will fact check it. And if you want to go a step further, you interview 2 to 3 people, you ask them the same questions. And if there's a discrepancy, someone's lying. But if they all say the same thing, then hey, we got some truth here. Now, I would say another thing that you want to look for is the 1% rule, right? Anything over 1% would be even better. But the 1% rule basically means that if you buy a property for, let's say, $100,000, the rent each month should be roughly $1,000. Now, if you can do that, it's like a foolproof plan that you're going to make money and not lose money, even with the high interest rates today. So that's what we did.
That's you make it sound so easy. So I'm going to hang up now and go buy something. And I love, by the way, just going to Google because again, a lot of times people I overcomplicate stuff in my head. Do you buy in partnerships or do you buy just on your own?
I do both, actually. So obviously I run a brokerage here in the Bay Area, and I try to encourage my agents to buy properties. Don't buy the new Range Rover. Don't buy the new Mercedes. Don't buy the Rolex yet. Okay, let's take your commissions. And especially when you're buying in a state where the average property is $115,000, $120,000 for a 3-bedroom, 2-bath house. I mean, it just makes way more sense to buy a house than a Range Rover, right? And then, so in those cases, I do partner with my realtors. I want them to have skin in the game. I want them to know, hey, look, I'm doing it. I'll do it with you, because that's how confident I am in the fact that this will get you wealthy in the future, right? And then I do also buy 1 to 3 properties every single month now.
Wow,
I'm hooked.
Wow. That's great. And you're buying out of state mainly right now?
Mainly out of state, because right now, California, I've been looking. I'm trying to 1031 exchange some properties, and there's just not much, and the rates are still horrible.
Yeah, what are you looking for as far as like returns go, right? We hear big words like cap rate and with $100,000 purchase price, some lenders, considering it an investment property, are going to say you need 30% down. So coming up with, that much money could, in theory, be a lot for somebody. So if you can partner with someone, create an LLC, maybe you go in together. What are some creative ideas like that you have either done yourself or coached some other people to do?
There's a lot, actually. You believe it or not. There's something called creative financing, where you can put down less and you might not even need the bank to qualify you. You just have to teach or educate your realtor in that market to start pitching that formula. Now, creative financing it comes in many forms, but the one that I'm talking about is, let's say you find an owner who has a property that's worth $120,000 and it's paid off. Well, rather than you going to the bank and getting qualified and then paying that owner, you can talk to the owner and say, hey, Mr. Owner, how about you become the bank? I can give you $20,000 down or $15,000. It's really negotiable. Now, you will have the note, which is like the lien, like what a bank would do with your home, and they would then become the bank and loan you the rest, let's just say $100,000 or $110,000. And you agree upon a price for them that, hey, every month I'll pay you $800 or so. And the beautiful thing about that for them is, in most cases, they don't have to pay capital gains on that lump sum. So there's a benefit for them. Sometimes they're retired. Sometimes they don't know what to do with $100,000 if you paid them one lump sum. They like the $800 coming in every single month.
See, but they could be buying a Range Rover.
I will say for a lot of folks that I know that are of a certain age, they would rather have the steady income versus the lump sum.
Agreed. Because once, let's say if they're, let's say they paid that property off and they were to get that $100,000, they would probably pay on the minimum $20-something thousand in capital gains. And so they would only be left with 80. And then now they have to worry about budgeting it and where to put it. But if you do this case, they'll make more in the long run. Banks make a lot of money. If you ever see what you pay off their 30-year mortgage, you end up paying more than what the property, what you were in contract for the property were. So it's a benefit for both parties. So that's one way. That's the other way is, of course, you can partner. I would say make sure it's somebody that you really, really trust. Partnerships are, I'm not going to say it's like the easiest thing. You want somebody to know that they're aligned with you, understanding that this is a property that you're going to keep for maybe quite some time. And when it is time to sell, you're going to be doing a 1031 exchange. You're not going to just sell it and cash out,
Take a second and just explain what a 1031 is for people who
Sure.
maybe don't know.
A 1031 exchange is when you sell a property, and rather than taking all that money, you take the money and you go and buy something of equal or greater value. That's also real estate. And the benefit of that is that now you don't have to pay Uncle Sam taxes. And that's sometimes saves you a lot of money.
Yeah, but then eventually when you do sell, so this is like a great strategy, and they always talk about like maybe owning things in a trust or owning things in an LLC and exchanging them and exchanging. And they say the strategy is exchange, die, right? Because then at that point, but if you're holding it in a trust or it's in an LLC or something like that, that entity can continue on. But again, you will recapture anything. You'll recapture all of the taxes that you haven't paid, all the deferred taxes. But you mentioned one thing which I think is really important, and then you also mentioned trusting people in a partnership. You said that when you're working with your agents or people on your team, that you have skin in the game, and I think that's really important if you're looking to invest with somebody, because there are syndications out there, and I don't know if you syndicate properties at all. I've been involved in syndications where, man, the person that's syndicating, and syndicating basically is, I have this property, I'm going to sell you shares of it. And either you're going to bring in an LLC or you're going to come in as an individual, and I'm going to sell you shares. And for putting it together, I'm going to take 50% of everything. I'm not putting any money into it, but I get 50% and you get the other 50%, even though you're supplying 75% of the money or whatever it is. Having that person that you trust, having skin in the game, I think is incredibly important. Have you been approached, or have you had deals where you've said, no, I don't trust this guy, I'm not doing this?
Oh, 100%. Especially with what you said with syndications, you're not buying the property, you're buying the what are they called? GPs, the general partners, right?
Yeah.
And so if you don't trust them, you don't buy them. And that's a different animal. I have invested in syndications. They haven't done very well, especially with this real estate climate. And ultimately you have no control. And so I always tell people, buy the property yourself first. Mm-hmm. Those you have control of. Those you can exit when you need to exit. You can, trade up or you basically can control your fate, your money. In a syndication, it's up to them. I haven't seen a penny for 3 years. So
yeah, the guy I worked with, he had a great philosophy. It says, if you can't explain the deal to me in one sentence, if you have to say "and," I'm not interested. So,
yeah,
I thought it was really great. Like, we're buying it for this much. Here are the rents. But if it comes into, and here's how we're going to pay out, like, no, we're done. We're done.
Yeah.
I think that goes back to what you said at the beginning, which is real estate conceptually is very simple, right? Everybody needs a roof over their head. And people will continuously need to rent for various reasons versus buy. So depending on where you're looking, do you consider things like housing shortages or rental market near colleges or things like that when you're looking at areas specifically to look deeper into?
I do. So surface level, we look for the 1% rule. We look for landlord friendly states. Obviously, as landlords, things are getting tougher for us because if you have to do an eviction, that costs a lot. In California, it's getting really expensive. And I had to deal with 4 or 5 of them last year myself. And so landlord friendly state, then you go down and you look for population growth. You don't want to see a decline, because if the population is growing, that means that you're likely going to have a housing shortage, which then drives the value of your property up and also drives the demand of your property up. And so I look for that. Then I look for properties. I try to buy them a little bit newer, 1980s or newer. I try to buy brick, right? Brick lasts a lot longer than stucco. They last a lot longer than the wood frame homes, because those have termites and everything like that. I try to buy things with slab foundation, because slab foundations are a little bit more sturdy. The pipes don't burst as often. They're all underneath, and they're encased. They're just poured in. I try to look for properties with already a new roof because roofs are very expensive. Doesn't matter if you're in Alabama. Believe it or not, these properties are $120,000, and the roof is still anywhere from $4,000 to $7,000. So it's a lot. So you try to buy it as nice as possible. And again, just keeping it simple. If something looks terrible and ugly, you better get a deal. If something looks really nice and the inspection comes back very clean, that's a good deal. So that's what we look for, and that's what I teach. And then the next level is, then you go buy the ugly, the broken, the dilapidated, but you buy them for such a big discount, and then you get your crew in there to fix it for minimal, and now you have a property that's worth significantly more than what you're in it for. But there are levels. Yes,
and that's by the way, that's also a great dating strategy, right?
Yeah.
like because once you know what you're doing, then all right, now let me fix somebody. I think one of the cool things which you just mentioned is knowing your expenses. No matter what, like you're thinking, oh, I'm getting $100,000, so then the roof's only going to be $5,000 or something, or $2,000. Like no, there are certain expenses that you have. What about when you're buying? In terms of, you were saying landlord friendly. How do you determine if a place is landlord friendly compared to, like, I mean, you're in the north. I'm here down in Santa Monica. Rent
control central.
Yeah, I mean, it's like garlic to a vampire down here.
Let's see here. Google rent friendly, landlord friendly states. That's the first that I do.
I will say that I used to litigate rent control stuff, and I told myself that I would never be a landlord in San Francisco either. And I have plenty of clients who are, and they do wonderfully well, and that is their cup of tea. It's not mine. But yeah, you can very easily Google what cities or counties or states are rent controlled or not. On that note, question for you. Do you go so far and look at tenant profiles, or do you leave that to property managers and just kind of trust them?
For my Alabama stuff, I trust the property managers because at the same time, they know best. They're actually the ones seeing them face to face. But I also do self-manage my portfolio right here in California. I do own in San Francisco. I do own in Oakland, two of the hardest cities. And so you definitely do have to look at employment backgrounds. You have to look at tenant history. So I'm calling their previous landlords. They could lie, sure, but I'm doing the whole nine. And you got to make sure they have the money. You got to make sure they're putting down a big deposit. You got to make sure that they, you're looking at income verification. You're doing the whole nine. You have to, especially here.
You bring up a really good point in terms and I always, when I was doing property management, I always called not the landlord they were leaving, but the landlord previous to that, because that's the person that will tell you the truth, unless they have the same last name.
Because the one previous, they just want them out of their house. Right. So they're going to say all the good things.
Oh, they're fantastic. Exactly. It's the one before. But here's something which I think people don't get. And we always have to remind clients of this when they're buying an investment property. And they say, well, how do I do this? Or how do I do that? And the key is, you're running a business, right? When you are buying a property and you're renting it out, that's a business. So you need to have an attorney on hand, or at least you need to be a member of a landlord advisory group, like, Apartment Association of Greater Los Angeles, or whatever it is in your area. And people don't understand that you're not just buying something and then just, oh, here you go, goodbye. I'll come back and get my check. It's like, nope, you got to fix this stuff. You got to make sure that that the place is clean, that you're getting your maintenance done. You have to check on your property management company though, too. So in Alabama, do you ever go out and visit the properties and then just make sure that they're being run in a certain way, or do you just have that much trust with your partners there?
That one, okay, so Alabama, no, I've never been out there, but what I am doing is I am checking in on them once a week, right? I am looking at the numbers, I am running it like a business, and I'm calling them all the time. And so I'm not going to fly out there. It's just too much time and energy, but
you can visit the space center there. What do you mean?
I didn't know there was one. I know there's
Huntsville. Yeah.
And then, obviously you trust your realtor. You have your realtor check up on your properties, right? To cross-reference the property manager. I rely on my insurance agents to go and check up on things. So I'm using the resources that I have to make sure that things are running smoothly. And obviously, if the numbers aren't adding up, then that's a different problem. But so far, so good. You do have to trust a little bit, but you still have to set expectations, and you got to make sure you check up on everyone. But
One
that's
thing that we
also
haven't
why-
touched on yet, Brian, is
Yeah.
property types. So I would love your thoughts on single family versus condo or multiplex.
Yeah.
Thoughts?
Okay. I don't buy condos anymore. Because of the HOA, it becomes too unpredictable, and again, control, right? The HOA, if it's run good, like properly, it should cover the roof. It should have, taken care of the property, but sometimes that they don't, and then there's a special assessment. And so I don't want that. Single families do very well, and I try to buy 3 bedrooms, 2 bath, because then that opens it more for families, and families stay for a long time. And I do buy multifamily as well, but it just depends on the area. So here in California, I try to buy multifamily. It just makes more sense. It on the economy of scale, it's better. But in Alabama, there's not especially in Montgomery, there's not a lot of multifamilies to buy. And so I just buy the single family, and then I actually utilize Section 8, which is a federal program that basically helps pay rent, and they pay very well. They pay more than what a traditional renter would pay.
Yeah, NPR just did a story on that just today in terms of Section 8. They were talking about San Francisco, I believe, and kind of the mismatch and how much paperwork's involved in that. And I know that a lot of landlords don't want to do Section 8 because they have a misconception about it. Just curious if you can just talk about your positive experiences, if you don't mind.
The rent's always on time. Doesn't matter if what's going on in the economy. I'm getting paid. That's really good. Also, some landlords don't like Section 8 because they do an annual inspection because they got to make sure the property is still good. Otherwise, they don't pay you. I actually like that because guess what? Forces my property managers to go to the property and make sure it's in good condition. So there's a lot of pros. Now I get it. There are some cons, obviously. Sometimes, like your properties can get destroyed, whatever the case. I've had it happen to myself, but that's the name of the game. In business, nothing is ever going to be 100%, sunshine and rainbows. It's not, and I don't want to scare people away from real estate, but that's just the reality of life. Nothing is ever going to be 100% perfect, but it's pretty dang good.
What about, you said something earlier, well, we were talking before we came on live with regards to, market changes, right? So the last couple of years, we've all been dealing with the higher, quote unquote, higher interest rates, but higher than, say, the last 8 years. But then also in 2007, 2008, it was the market crash. Is there any consideration to your investment with regards to timing the market?
I don't time the market. I just want time in the market.
Quote that.
Now, damn, there's our quote.
Yeah,
we should
that's the
stop
quote.
now. Stop now. Goodbye.
Because I bought properties in 2013 when things were kind of shaky still. It was on the rise. Nobody knew rates were at the time. We thought it was high, 4.5%, 5%, right? And then guess what happened? Years after that, it dropped down to 3%, and then it became 2.5%. And again, if I didn't own that piece of property, I would have not been able to do something called a cash out refinance, right? And what that means is you were able to pull money out of the property, and if you do it correctly, you do it at a lower interest rate to where now your mortgage is actually sometimes lower or the same as what it was. But now you have an extra $100,000, $200,000 to go buy more properties.
Tax free too. There's no, because you didn't sell anything, you just pulled it out. I love the tax code for that.
Yeah.
I'm gonna shift gears here, and which is I drive an automatic, so this might be a little rough. Pardon me. But I want to talk about your coaching as well, if we can, because you are giving so much knowledge on this. So I know that you coach agents in terms of how they can increase their business, and I do want to hit that. But do you also coach agents? Like, do you also do support for I want to invest? And hey, you're my investment coach. I'm just throwing that out. I have no idea if you do that or not.
I do. It's a big thing. It's a passion of mine because it's changed my life, and I know that it can change other people's lives as well, and that's why we do it. And so it's second nature, and it's not hard, really. So I always try to have my agents. We talk about it all the time. I help people actually in our community, at the side community. We talk about buying properties, and it's more fun when you do it with people. I'll be honest with you. Mm-hmm. And then now,
where did the passion come from? You mentioned your parents, but that's got to just be one pillar of it. Like, where did you like get that passion for watching other people succeed in their wealth journey?
Well, that's just what it is, right? You do it one time and you're like, okay, I'll help you out because you're a friend. And then you see them do well, and then you see them actually do better than you, and you see their wealth go up, and you see how their life changes, and it feels good. And then I was like, okay, you know what? This is where we're going. Like, you do what you like, you do what makes you feel good. Coaching makes me feel good, you know?
What's the coaching program called, and where can we find it?
It's called Rent to Riches.
I like that.
We have Rent to Riches. I also flip properties, so I teach people how to do that. That's called Flip to Riches, and then the umbrella program is called Invest to Riches. It's kind of like, and where you can find it, you can follow me on YouTube. It's my name, Mr. Brian Tran. My Instagram is Mr. Brian Tran as well, and if TikTok is still around, I'm on there as Mr. Brian Tran, and so I'm pretty easy to find. If you Google me, I'm the first one, and so. You can find me on the side community. This is where I think our coaching program is, but I'm also on School, SKOOL.
That's so cool. It's so interesting. What are your thoughts before we wrap up? I want to get your thoughts on, say, people are themselves renting because they live in an expensive area, right? Like the Bay Area. What is your opinion, or do you think they should get into home ownership somewhere else? Then ultimately they can build their wealth, because I think a lot of people think the first step is to buy their own primary residence and feel prohibitive of buying investment property.
I'm the opposite. I'm probably going to go against every single realtor that says buy your house first. I actually say buy the investment property first.
Yeah, that's what Brian Kiyosaki says in Rich Dad, Poor Dad. He says buy the investment property first.
Well, think about it, right? Like I can only speak on where I'm at. Okay, I'm in California. I'm in San Francisco. You know, you're gonna buy a property that's 1.5 million, 2 million, right? Your mortgage is gonna be closer to $7,000 to $10,000 a month, right? That's gonna eat at your W-2 income. And now you're not going to have money left over as much to go and buy the property that is bringing in the rental income. And currently, right now, as we speak, it is actually more expensive to own in San Francisco than it is to rent in San Francisco. And so I would say it's all about the chapter of your life that you're in, right? And I say this is not general advice, but my thing is let's get your money, your income up. And then that way, once that gets so high, then you can go and live in the beach houses and the stuff that just costs a ton of money.
Yeah. I mean, after today's call, I think I'm going to sell my Range Rover. I don't have one. I don't have one.
I'll be honest with you. I've been so lucky, and I've been buying properties since I got into real estate. I bought my very first property with a stated income loan, which means that I had no W-2 and the rates were a little higher. And I'm so thankful that I did, because I just kept buying after that. I got hooked after the first deal. The first deal is always the scariest one. It's the one that never makes sense on paper. It's the one that puts so much stress on you, but it's the one that's going to allow you to grow so much.
Mm-hmm. Where did you buy your first property?
In Oakland, California.
You did? Wow.
Kind of, it's a little scary even to this day to go, but it's still worth a pretty penny. And
single or multifamily?
Single family, and I was able to build an ADU on the back because Oakland law changed. And so again, you can either try to time the market, or you have skin in the game. You're in the market, and guess what? Laws change. They allow you to build ADUs. Rates dropped. So then my mortgage dropped, and I was able to pull out money to build the ADU. And then on top of it, the equity that I've made in that property, it all went up. And guess what? All I did was buy the property. I didn't, the rest was taken care of by the market. Amazing. And then rents went up like crazy. I think that's something to take away also. Like, utilize your network. If you have insight into a particular area where, say,
hey, the city council is voting and they're building a huge Amazon facility or a huge space facility or something. If you can get in now, just get your foot in the door, the demand will come, your property value will increase. And then, like you said, you pull value out and you go do another one. Super valuable information.
I try to simplify things, it can get complicated later, but by that time you're going to be more sophisticated. You're going to have 4 or 5 properties. But I think for the average person, just keep it simple first.
All right, let's do this. Takeaways, just 3 or 4. What are boil it down to 4 takeaways that somebody should consider?
Shoot, that's hard. Okay, I got to narrow it down to 4. Okay. Follow the 1% rule for your first couple properties. Okay. Buy a landlord-friendly state, because that's going to be important. And that just means that, look, if someone doesn't pay, how fast can you evict them? That's important, because every month that property isn't making you money, it's actually costing you a lot because of the mortgage. 1% rule, landlord-friendly state. Always do the math. Keep it simple. Leverage your team. Do the math. Make sure that everything checks out and that there's money left over, cash flow. And then just bite the bullet and do it. Buy the first property.
I love that.
Yeah.
That's awesome. Brian, you're a wealth of information, and we will link all of your contacts and everything in the show notes and in our Instagram when we post it up. But this is awesome. We'll have to do a follow-up, like a level 2 investing in real estate in the future.
Then you can bunch them all together and then you trade them in for a big multi apartment. It's like Monopoly.
You know what? I'm going to make a prediction right now. I'm making a prediction right now that in 12 years, you're going to be coming down a golden escalator at Tran Tower.
It's funny. My son said he's going to build me one.
Oh, ooh, that's good.
6 years old, and we saw a gold tower, and we were in Asia, and he goes, "Daddy, I'm going to buy you that." I said, "Which one?" He goes, "The gold one." So I don't know. I might not. It might happen.
I like it.
I love it. Well, thank you, Brian. Thank you, Spencer. That was an awesome episode. I appreciate you all. And we will see you on another episode of Own It in the next couple weeks. Thank you again.
That was an awesome episode. I'm so excited to implement some of those tactics myself. And join us in a couple days when we have a very timely episode with our managing broker in the DC metro area, Will Wired. We're going to talk to him about everything we're seeing on the headlines. Is the housing market in DC really imploding because of the mass exodus? What is he seeing on the ground? And are there opportunities that you as an owner, as a property investor, or a realtor can capitalize on and help your clients at the end of the day? So join us on that very special episode, which is dropping just here in a couple days. Stay tuned.